हेलो एवरीवन, वेलकम टू लेमन। एंड आज हमारे साथ है शैली जो कि हेड करती हैं प्रोडक्ट्स फ्रॉम टाटा एएमसी। एंड वेलकम शैली टू आवर चैनल।
Hi, glad to be here.
थैंक यू। तो आज हम बात करेंगे जीएसटी रिफॉर्म्स के बारे में और एक नया फंड जो कि टाटा ने लॉन्च किया है, जो कि है टाटा निफ्टी नेक्स्ट 50। एंड हम समझेंगे कि ये फंड कैसे बेटर है और कैसे क्यों किन किन यूजर्स को इनमें एक्सपोजर लेना चाहिए। तो लेट्स स्टार्ट आवर सेशन। शैली, क्या आप मुझे थोड़ा ब्रीफली हमारे यूजर्स को बता सकते हैं कि जीएसटी रिफॉर्म्स में क्या क्या चेंजेस हुए हैं, क्या क्या अच्छे पॉइंट्स हैं और हम क्या एक्सपेक्ट कर रहे थे, और क्या गवर्नमेंट डिलीवर कर पाई है कि नहीं कर पाई है?
GST reforms has been a very compelling, news for the markets. It has, brought a lot of cheer to the markets and sectors also. GST has, entered and has done good to sectors like FMCG, to sectors like, autos, small cars, some bit of two-wheelers as well, to insurance. Through the input tax credit, the benefits have gone into metals, cement, as well as healthcare some bit. So overall, it has really helped the sectors in terms of the and it has actually left monies. And when you club this with the announcements during the union budget, uh, the overall disposable income which is there in the hands of the consumers actually has gone up quite a bit. So that will then creep into other segments, and eventually it will lead to a volume rise over a period, and over the next 4 to 6 quarters it will surely show up. It is expected to show up in the GDP growth of the country.
श्योर। तो जैसा कि हमने लास्ट टाइम, जैसे आपने मेंशन भी किया कि यूनियन बजट में भी द गवर्नमेंट रिड्यूस्ड द टैक्सेस एंड व्हिच हेल्प्ड टू गिव डिस्पोजेबल इनकम टू यूजर्स, बट इन द स्टॉक मार्केट इट वाज वेरी शॉर्ट लिव्ड, लाइक बिकॉज ऑफ एफआईएस कंटिन्यूस selling also and everything, but it was short lived. Like it was not we did not see a prolonged effect of it. And do you expect the same thing with GST, or do you expect this time there will be a prolonged effect which we can see from the stock market perspective?
So there have been too many things, too many events happening. One is of course the tariffs, and the way the way we are seeing things is that tariffs. It's not that it is a very big impact, because India itself, the exports to US, and out of the total exports which India does to US, what part has been impacted? Taking that into consideration, it is, let's say, a 60 to 80 bips overall impact on GDP. Now, this GST, reforms are being looked at as, reducing the impact, GDP impact of the tariffs. And within the GST discussion, also, if you were to discuss the country's finances, some bit, of course, the revenue loss or the revenue takeaway has happened because of the income tax structure tweaking, because of the corporate tax structure tweaking, because of the GST rates rationalization being happened. But on the other side, you have RBI dividends, you have the disinvestment proceeds, which will bring in the positive impact and make up for any revenue loss. And you also have the unutilized capex expenditures which are there. So all of these net would positively impact GDP to the tune of, let's say, 0.20 to 0.30. And then you had some impact coming in because of tariffs. So overall, the impact of GDP, the GST, would be net positive for the country, for the economy, and that would also some bit offset the impact from tariffs. So overall, GST has actually come at a very opportune time to take care of multiple things, and over a period. See, these GST rationalization acts, or the actions to permeate totally into the economy and start showing up in volumes, will take some time. It is not an overnight thing. But over a period, this would definitely seep in, and we expect it to seep in and then start showing up in the volumes over a period. But to take care of the fiscal piece for this financial year, you have these other math that we spoke about to take care of even the fiscal piece in this financial year as well.
Shelly, the next question which I have is basically in FMCG sector. If you see, like we spoke about that this GST has been brought down from some of the 18% to 5%, also from 5% to 0%. And in FMCG, like let's take an example of Britannia, or let's say a biscuit company, right? So like previously they were doing packaging of 5 rupees, right? Now, how do you expect them to bring down the prices to like 4 rupees, or will there be a how will it work out? Like, I think that will be an interesting point. Users want to know that maybe it will be like the volume, like the number of biscuits would reduce with the price, or sorry, the number of biscuits would increase with the price, or because the SKU and the packaging would be like 5 rupees, 10 rupees, and how will it change?
Yes, I think the maximum impact, a lot of impact, positive impact has been to the biscuits company, yes, because there the GST rates have been brought down quite a bit. So that impact definitely will be seen, by the companies like Britannia. Some of the other companies which are, valuation wise on the higher side might not see so much of positive impact in terms of stock returns, but yes, the impact to the business largely would be to the FMCG companies and especially to the biscuit players. Yes. I think it if the SK the unit is too small, then yes, the weighing would go up. That's the expectation. But otherwise, if the unit is not too small, then yes, the unit itself can become smaller, and there is more room to have retail, more and more retail kind of packet sizes, and that could really help the distribution.
Sure. In auto sector, when we speak about auto, we have seen a good momentum, like in last few weeks, that auto sectors have done really well because that's a huge discounts they can offer to the customer, like who were waiting for buying any new car, new two-wheeler. They have been really appreciated by the GST coming down. So, like, which particular pockets do you think will do really well? For example, do you think the two-wheeler segment will do really well, or the four-wheeler segment, or any EV sector that is dependent on, like from the four-wheeler sector segment will do?
I think small cars within the autos, our view is that the small car piece will benefit the most. Of course, because the disposable incomes are expected to increase, the impact will come. The positive impact will be there to two wheelers as well. But the 1200 cc and below, that segment, the small car segment, that is expected to take off quite a bit from within the auto space. And I think the effective date also the government has brought closer to and has taken care of that festive season very well while deciding the effective date. So that also will not lead to any leakages or losses because of the wait time. So that also has been taken care very well. So small car piece is something which we are expecting to do better. On the EV side, yes, it's a mix of things. A lot of companies are manufacturing, the traditional manufacturing OEMs are also manufacturing EVs, and that push and that thing continues, of course, but it's largely the band of 1200 cc and below which is going to benefit the most, whether traditional or EVs.
Sure. So let's move on to the new fund that Tata AMC has launched and is there till 26th of September for subscription. That is the Nifty Next 50 companies, Next 50 index, and it's a passive fund. Yes. So basically, how it is different from any other Nifty Next 50 fund that is currently available in the market.
So the Nifty Next 50 by the house of Tata, from the house of Tata, the passive fund, the form the index fund, that's the same as any other portfolio. But yes, our conviction is higher for multiple reasons. But if you say that how is Tata Nifty Next 50 different, the portfolio would be the same because it is expected to replicate the index itself. So how the index is constructed is basically, from Nifty 500, the universe of Nifty 100 or Nifty 100 is constructed. So for Nifty 100, the universe is Nifty 500, and from Nifty 100, first the Nifty 50 is constructed, and that is frozen, and the remaining 50 companies go as part of the next 50. So that's the key reason how. And in Nifty 50, your FNO, the stocks need to be mandatorily part of the FNO. However, that mandate is not there for Next 50, with just one rule that the non-FNO stocks should not cross about 10% of the portfolio. So once the Nifty 50 index is constructed from Nifty 100, and then the remainder stocks, the stocks beyond the 50 top 50 companies form part of the Next 50. So the key reason, the key difference between Nifty 50 and Nifty Next 50 is or lies mainly between the profile of companies which sit here. These are kind of largely defined as emerging leaders. These are emerging sector companies which sit here, and they have a relatively higher earnings profile than Nifty 50. This index is much more diversified, as in terms of the sector allocation, it's much more smoother. And the sub-segment diversification is also higher in case of the Next 50 index when you compare it with the Nifty 50. So that's largely the difference if you just compare. So Nifty Next 50 has higher allocation towards capital goods, towards consumer services, towards reality, towards some bit healthcare, and Nifty Next 50 has lower allocation in as compared to Nifty 50 you would say what you say, financials as well as IT. So these are the higher allocation and lower allocation differences between both the indices. Yes.
Okay. And like from a mid cap perspective, if someone is looking at mid cap and Nifty Next 50, what are the differences they can see from these two funds?
So in fact, in Midcap 150 also, there is a lot of subsector diversification which sits there as compared to the large cap space. There are unique, segments. There are unique basic industries. There are leaders in that segment as well. In Nifty Next 50 as well. But again, as you go down the value, the market cap valuation chain, the market cap rung or the ladder, you would find the risk reward ratio. So higher the risk, higher the reward. So when you compare, let's say Nifty 50 would be earnings in the range of expected earnings in the range of 8 to 10. Next 50 would be 10 to 12. And mid caps, we are expecting higher, let's say, 15 to 18. In fact, next 50 you can take in the range of 12 to 15 as well. So 10 to 12 Nifty 50, 12 to 15 Next 50, and 15 to 18 is mid cap 150. So that's the kind of positioning. Nifty Next 50, because it houses a lot of emerging leaders. The volatility of Next 50 is higher than even Nifty 500, as well as Nifty, it is 1.5 times of Nifty 50. So during expansionary bull phases, Next 50 actually, leads the rally, as in it expands more and it outperforms the broader market. And that's something, and it is more volatile as well. In fact, a very interesting data point from 2003 to 2017, during this period, whenever there was broad market outperformance, which means Nifty 500 doing better than Nifty 50, in fact, I think in those 15 years, some 11 to 12 times out of those 15 years, Nifty Next 50 outperformed even Nifty 500, purely because it has a growth streak to itself. It has growth companies. It has emerging leaders sitting there. So even when the broad markets outperform, Nifty Next 50 tends to do better than Nifty 500 as well. Also, you know, the factor inclination is incidental. So the at the heart of these market cap indices construction lies free float market cap or full market capitalization. Those are the larger rules. And the factor tilts which they are all incidental. But if you see, Nifty 50 is largely quality and large cap stability. Nifty 500 is quality and momentum, and Nifty Next 50 is actually growth and momentum. So that's exactly the reason, because it houses growth companies and high growth companies and sector leaders. It tends to outperform when there are expansionary phases, or investors are looking for higher growth, or higher returns, or higher are willing to take risks during those phases, or broad market recovery happening during those phases. Nifty Next 50 tends to do very well.
Sure. Uh, I think we are done with the questionnaire and the session. And thank you so much, Shelly, for coming to the channel
Thank you.
and informing. And it's a very well informed session for the users, I hope. And so, again, to end the session, just to inform again, the subscription to Nifty Next 50 is open till 26th of September. And if you wish to subscribe, just go to Lemon and you can search for the fund and subscribe there. Thank you. Thank you very much.
Thank you. Thanks. My pleasure. Thanks, Gaurav.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.